Now, there is a movement going on in the Nigerian stock market. Now, a very strong struggle between the bears and the bulls, that's the buyers and the sellers. Now, like we always establish on this show, in every condition of the stock market, there's always an opportunity for smart investors. And what we are going to be doing today is that we are going to be telling you 6 stocks you can actually buy now, especially now that the market is in a state of uncertainty where the bulls and the bears are still having a struggling time with themselves. Now, these stocks of these businesses are businesses that will always be there. They always make money for their investor, no matter the season that we are. Welcome to Clockwise. My name is Providence, and today, as I said earlier, we'll be talking about 6 consumer staple stocks, yes, that you can actually invest in now and still make money. Now, I don't do this alone. As you know, my guest is here, the man I always say he sleeps on the charts and he understands the fundamentals of these businesses. Now, with a resounding virtual round of applause, welcome my guest, Mr. Cannon. Welcome to Clockwise.
Thank you very much for having me.
We are having a very strong struggle. Is it a struggle? I'm not sure it's a struggle. It's just an altercation between the buyers and the sellers. The buyers came very, very strong at the beginning of the first of July. They came very strong in the market. They overtook the market, but we are still seeing the sellers still coming up.
No, I mean to say the sellers actually took over.
Yeah, took over. Yeah,
First of from the month of
June. Yes. Then earlier in the month of July, we saw something that looked like a glimpse of hope, where we saw the market becoming green and a lot of buyers came inside. But we are seeing a very different scenario now, as if there's a struggle. Now, how do you place this?
So there is actually a reason for all of that. So like we had already predicted in the month of April that April and May that June will be a down month, which eventually happened.
Yeah.
Then we also mentioned in the heat of that the crisis, or you can call it the blood in the street. I remember I was here and you asked me what the future. I said I'm expecting something to happen in the month of July, and there was a reason I said that. Number one was because this July you expect earnings calls. So quarterly earnings and half-year results will come out. And I mean, Q1 was very good. Q2 is also, for most of the companies that have given some preliminary guidance, it's also good. So we expect Q1 results to be generally good, as well as H1 results and Q2 results to be good. So that is why you've seen that. Then apart from that, we've had some kind of ease. If you look at the fixed income market, we've had, I think, the market, the bonds actually went down, eased by about 50 basis points. So when that happens, then the bond market is less attractive. And if you look at some of the equity names, have actually corrected so much that they are becoming very attractive now. In terms of their PE ratios and their general valuation. So I think that is what has actually brought, look at the likes of MTN. MTN went down from 800 over 910 to around 720.
And now move again.
You have the likes of Aradel that moved from 2,000, almost 2,200 down to 1,170. So that actually made that particular name to be, some of those names to be very attractive. That's why
as an analyst that actually pay attention to the happenings, not just the price action, but also the fundamentals of these businesses. Now, what do you foresee? What do you foresee in the market in the next quarter?
Here is the deal. There are two things I'm actually looking at. I am looking at interest rates. I'm also looking at the price of petrol, because I mean, you know that of course the Nigerian market is like export is a fuel-driven economy. So if the price of fuel moderates, I mean, in the next week we'll have the MPC, the Monetary Policy Committee, will sit. I think that should be like an academic exercise, because we don't expect a high, we don't expect a low. But again, one of the things we also look at is the guidance. What do members of the committee think inflation expectation is going to be through year-end? What that will mean is we will know whether the MPC is leaning hawkish or dovish. If that leaning hawkish, then that means we expect bond rates to remain elevated. That means fixed income market will remain attractive. So that would be a very serious blow on equity markets. That's the first thing I'm looking
Okay.
at. The second thing I'm looking at is actual earnings quality. If earnings quality begin to dwindle, I'm seeing a lot of investors. Earnings quality will also affect dividend yields. So I'm seeing a lot of investors rotating, because again, it's about balancing risk.
Yeah.
What's the risk of exposure to the fixed income market? What's the risk of exposure to the equity market? So if earnings quality, earnings growth, let me use the word that would be more understandable. Earnings growth, if it remains muted, then there will be a challenge. Currently, earnings growth first quarter, you saw that some companies did triple-digit earnings growth. So if that momentum remains, then I believe that the equity market will rebound, and that will be. But if there's a stumble, if it tumbles, that if the earnings growth tumbles, then we can expect people to rotate back into the fixed income
Now, we've always said that consumer staples are like defensives in every market, whether the bull market or the bears market. Consumer staples are always defensive.
Yes.
In fact, in a state of uncertainty in the markets, consumer staples are defensive. Now, let's discuss that. How do you see buying stocks, consumer staple stocks? Why do you see it as a very important stock to be added to your portfolio?
So beyond the theme, we always talk on this channel that people should diversify. Beyond that, remember I said something a moment ago. I said we are looking at inflation expectation.
Yeah.
You can see what happened. The bond, I think on the last podcast when you asked me why the market corrected, one of the reasons I mentioned was the attractiveness of the fixed income market.
Bond market.
So the reality is, one of the things why you want to lean into staples is because, think about it, no matter how much interest rates remain high, will people stop eating because the MPC has taken up the interest rate?
No.
So it is like, that's why we call it defensive. It defends your portfolio against
the uncertainty
risk.
Yeah.
I know somebody who had his portfolio construction, she literally had over 60% in a particular name, and it was in the industrials. You saw what happened. Industrials, some industrials got seriously beaten, they're seriously punished, and the portfolio is down. The portfolio is down by over 40%. So, but if you have, if you look at some of these, the names we are going to call today, even in the heat of that capital rotation into fixed income, you saw that they remained very, very resilient. In fact, the first name I'm going to mention here literally did not budge at all. Did not budge at all. So that's just the reality. You might have to understand this. You have to diversify your portfolio. Otherwise, if you concentrate on a particular name, if you concentrate, for example, let me give you something to think about very quickly. There was a time we were talking about, I think you actually asked me that question. We're talking about some names that we should go. I mentioned banking, and I also mentioned telecoms. I know of people that told me, banking is due to, I can't be doing telecom because at that time MTN was at a point. But we also mentioned Airtel at the time. And I remember very well that Airtel was trading, I think at that time, Zenith Bank was even trading at over 130. Airtel was trading at, I think, about 2,000, 2,000 something. Yeah. No, it was 2,000 something. 2,100 or thereabout. And then I mentioned Airtel. The guy, so that guy, okay, just put Airtel. I think he bought 1,000 units of Airtel, and then bought also those financial names. Airtel now is, from that 2,200 when we called it, it is now 5,800. Think about it. If he had concentrated on just banking stocks, you saw what happened to the banks, and at the price point where he entered the trade. You now see that Airtel has now, because of their present, his investment has more than doubled. It has now created a buffer in the portfolio. So you never want to concentrate on growth names. You do growth, you do dividend, you do you do defensives. And for me, I still have, including even fixed income, I still have exposure to fixed income. So you have to balance your portfolio. That's how professional portfolio managers.
Okay, now let's actually look at these names. Let's look at these names and see how they are faring and why you feel or you think that is a very good place to invest, especially now?
Okay, so the first name I'm going to mention is Nestle.
Okay.
Nestle Nigeria. Nestle Nigeria has been chopping around a particular range. But if you look at before that range, speaking technically, before that range, it was an explosive move. Explosive move because what actually kept Nestle's growth muted was the FX challenges that we had.
Okay.
Remember, Nestle is, I mean, they are the guys behind the cornflakes, the cornflakes, the Milo, you name it. You know a lot of Nestle products. So, but Nestle, suffered a very serious FX loss because they do a lot of importation.
Yeah.
You're good. But you can see FX has stabilized, actually. Nestle has very serious pricing power. Nestle has a very decent cash flow, strong balance sheet. Nestle has wide distribution network. When you look at consumer stability, especially FMCGs, one of the things you have to look at is how distributed they are, because this is it's a tiny margin business. So the more distribution you have, the more your margins, your gross margins expand when you have a great distribution network. So Nestle for me is a very strong defensive play. In fact, at the point, Nestle was more like a growth play because it was literally pushing high. Once the headwinds, the FX headwinds, and all of that, were those headwinds cleared, Nestle ramped up. Now it's consolidating, digesting some of the gains that it made. But I believe there's still a leg higher. But beyond having a leg higher, I am leaning into Nestle, because it is for me a defensive play. Because if something happens, I mean, you will not say I'm going to stop feeding my children with children products because
the price.
CBN has hiked interest rates. You're not going to say that. You're not going to say you're not going to use Maggi anymore because
CBN has increasing.
So that's what we call staples. Those are consumer staples.
The business will
still eat.
Okay.
So Nestle is
number
one place.
Okay.
The next one is Boa Foods. Boa Foods, when it talks about gross margin and gross quality and earnings quality, Boa Foods is there. When you talk about backward integration, Boa Food is there. The thing is that for about some weeks now, Boa Food has literally been, let me tell you, throughout all of these carnage that we saw in the NGX, do you know that Boa Food did not move at all?
You've been saying this.
Yes, they did not move at all because if you look at it,
the bear market did not affect it
at all. You can the minor bear markets within the bull market did not affect it. So
I like the way you describe the minor bear markets within the bull market.
It's a minor bear market. We corrected by 13 trillion. And by the way, we went down to 45% from 61% for 45%. So it's not as if it was such a big deal.
We're still being celebrated even during that particular period.
Now, I mean, Nigerian stock market was even deemed as, in dollar terms, it was deemed at the first,
over 67%,
the best, the highest growth profile, 67%, whereas the Korean stock market was at 66%. So, and that came from no other guys than Bloomberg. So you can trust that. So
I don't believe you that it was actually a bear market within
it
the
was
market.
a bear. We've seen this a number of times. The market can correct. And by the way, did we even get up to 20%? When you say it's a confirmed bear market, is when it falls below 20%. 10% correction is what we call a correction. 20% down is a bear market. So now you have that. Even in the bear market, it did not budge. Boa Food did not budge. So this represents a strong play because, again, people will always eat. Boa is in a lot of value chains. So that in terms remains resilient. And Boa also has, speaking of exchange rate, interest rates, Boa, any company that can actually fund its operation internally, that can manage internal cash flow, to ensure that it doesn't have to lean into borrowing to fund its operations, it is very resilient to interest rates, volatility. So, and Boa Foods is one of those.
Okay.
And their backward integration strategy ensures that their exposure to FX risk is muted. So, those are some of the things you look at. You look at the earnings quality, gross margins, balance sheet, and all of those. And by the way, in terms of return on equity, Boa Food is very, very, it's up there. You can use this as a defensive play, as well as to some extent a growth play.
Okay. Now, what's the third one? We've talked about the Nestle. We talked about the Boa Food. So which one is the third one?
The third one would be international breweries.
Okay.
International breweries, by the way, did something last week where they have actually reorganized their share capital. Let me explain what that means. You know, when a company says, for instance, we are offering 1,000,000 shares at let's say 50 kobo as a nominal price, and then we are offering at let's say 3 naira 50 kobo per share. What that means, that 3 naira is what we call share premium.
Yeah.
Good. So what international breweries decided to do, they have been running on serious losses. I think it accumulated to 191.3 billion naira. So what they did, and by the way, you know, like I told you, even in the case when you were discussing about Access Bank, I told you that one of the reasons why companies are not allowed to pay, if you have not made profit, you cannot pay dividends because it will be thought that you are taking it from the share capital.
Yeah.
Now, so the company has not been paying dividends because they have been making consistent losses, which had amounted to 191 billion. So what they decided to do was to eat that loss.
Okay.
By they use the share premium to eat those losses. So that means that they can, though they actually made profit in the last AGM. They mentioned that they made profit, but that profit can still not allow them to pay dividend because they still have a serious outstanding loss to deal with. So what they did was that they used the share premium to do what? To eat those losses, so that in book terms they are actually profitable.
Okay.
If they are profitable, that means they can resume paying. I'm speaking from an investor point of view. This is the only reason international breweries has made it to this list. Otherwise, it should not make it to the list, because I really don't consider companies that make consistent losses. I don't really consider them, really, to be honest with you. I know that, I mean, you will say, what about ABC Transport, which made a turnaround? But it's okay. That's a discussion for another day. But the point is, international breweries is a name that is very, I mean, if you look at in terms of beer, people drink beer.
Yeah, the World Cup is actually going on.
World Cup is actually going on, and people drink beer. But more important,
people always drink beer.
Yes,
people always drink beer. It's something like that.
I know why you're saying that. Not everybody drinks beer.
Okay, all right. Okay, so, we agree.
So beer. So people drink beer, but beer to me is cyclical, really. If there's economic downturn, please, I want to know. Some people will drink beer to wipe off their sorrows, but in reality, would you call your friends to sit together and drink beer when there is economic downturn? No, you'll be looking for money to eat first before you begin to declare. So that is why, for me, this is a cyclical play. But in as much as it is a cyclical play, but because of how fundamental beer is, you know,
we'll never get to that point where people will not be able to buy beer any longer.
But they will not declare.
Yeah.
Okay. So for me, international breweries, because of, in fact, international breweries, because of the fact that people drink beer, I think it's a staple for me.
Okay.
You know, the beer drinking culture in Africa is through the roof, actually.
Okay.
And I don't know why that is the case.
Okay.
So international breweries is a defensive name, is a staple that you should consider. And by the way, immediately they made that decision, the stock price shot by 40%.
Yeah.
Yeah. So that is it. I mean, there's been some moderation though, but I believe it's still a place where you can buy, because the name has actually been punished given the losses, the perennial losses they've been recording.
Okay.
The next one is
the fourth one.
The fourth one is Nigerian breweries.
Okay.
You know, we are still in the breweries
industry.
So Nigerian breweries is still a name, and Nigerian breweries, because I'm not just looking at names. I'm looking at names that have been punished. Because when a name is punished by the market, it brings it to a point where I believe it is highly undervalued. It brings it to a point where the price to earnings ratio, the valuation is very considerably cheap. You know. I always, as you know, I'm always a value guy. I told you to buy Access Bank when it was trading at 21.90, and you said no, that you don't do penny stocks. It has since rebounded to 25, and you know that it's already more than a 20% up from that point. Okay, so Nigerian breweries is also there, and I think it's been punished. It could be a good buying position for you, but like I said, for me, this is a longer term play because the recovery is not going to be very quick, but you can start accumulating these names. I've always talked about accumulate. Rather, when they got to 1,200 something, I told people you can start re-entering Aradel and accumulating. Now it's back above 1,500. That's already a decent performance there. So when I talk about accumulating names, you start buying them, accumulate them, because I see that they have come to a point where I believe their valuation is moderate or sometimes undervalued. So investors see these things. Investors look at these market dislocations and make decisions accordingly. So I think Nigerian breweries is at the point where you can actually
That's the fourth one. And the fifth one.
So for people that want to have, particularly people that are looking at subsidiaries of Dangote, I would mention Dangote Sugar. Dangote Sugar would literally be, if I were to pick a name outside Nestle and Boa, I will pick Dangote. So, in fact, if I were to invest in just three, I will invest in Nestle, I will invest in Boa, I will invest in Dangote. Now, Dangote Sugar is they just finished rights issue, some time ago. But Dangote Sugar for me is a very strong name. I talked about pricing power, especially for the consumer staples that are somewhat vulnerable to inflationary pressures. You look at pricing power and the ability of that name to pass on inflation to its consumers. Dangote has it. You talk about backward integration and a name that actually does that. Dangote is there. You talk about a name that can actually fund its internal work, fund financing or cash flow without necessarily having to lean into the debt market. We're talking about Dangote. I mean, recently they did that rights issue to raise money for expansion. So you're looking at a name that Dangote Sugar is all over the place in terms of its strong, its strong distribution network. Dangote is there. So that makes it to be a very strong name. That makes it to be primed for very strong and large gross margins. That makes it to be very strong in terms of return on equity. So those are some of the things I really consider before looking at a name, especially in the consumer space. So Dangote, even if there is interest rate get high towards the end of the year, I think Dangote is primed to really pass on that to and by the way, Dangote is immune from those interest rate volatility because it can fund its operations internally. So now Dangote for me is actually a very big name, which I believe and by the way, it's corrected. It started correcting immediately. They announced that what do you call it? That rights issue. I think it corrected very seriously. But I think it has.
It's picking up.
It's picked up. So I think you can actually come in at this point and then ride the wave back up.
All right.
The last one will be Unilever.
Okay, Unilever. I was only expecting that. Sense.
I know, but the last one will be Unilever. Unilever. Why did I put Unilever as down here? Because Unilever, among all these names that I mentioned, Unilever is the most expensive in terms of its price to earnings ratio.
Okay.
So Unilever is of course there are so many of the products that people use. So it's for me a very strong defensive. It's a good consumer staple, and by the way, its distribution network is wide. I pay close attention to distribution network. And then the variety of the product it produces, because in some markets you might have very stiff competition, which would reduce your market share. But in other markets, you could literally be like a behemoth. So that allows you to ensure that ensures that your earnings quality. It ensures that your gross margin remains elevated. Otherwise, if you are in one space, if you're consumer stable, that you're in one space, like if you like the likes of if you're in one space actually, then anything that happens in that space, if your competitive advantage is muted, if your market share gets challenged, then your earnings can actually dip. So I think Unilever for me is a name, and by the way, it's a name that you can actually look into. But this will actually be long-term plays for me. And if I'm asked to actually allocate to this, like I've already, like already, I would lean so much to Boa Foods. I would lean so much to Nestle. I lean so much to Dangote Sugar. I actually did some analysis of actually what I'm intend to do. I'll actually put 30% to Boa Foods.
Okay.
I'll put 25% to Nestle.
Okay.
I'll put 15% to Dangote Sugar.
Okay.
I'll put 12% to Nigerian breweries. I put 10% to Unilever, and I put 8% to the international breweries.
That makes it 100%.
That makes it 100%. That's if I had about, let's say, 10 million naira to put.
Okay, all right. Now, that's good. Thank God you've actually told us how you're going to reallocate or allocate your resources to it. Now, final word before you go. What do you think?
So here is the deal. We are all expecting the H1 results to be out. Investors should not fret. Stay invested.
In a week from now or 2 weeks from
now. In a couple of weeks from now, companies will begin to reel off those numbers.
And to affect the price of it.
I dare say that those numbers will be strong. Nothing has happened materially
to the companies.
Nothing has happened materially because if you look at, I think interest rates have stayed largely flat. So if interest rates have stayed largely flat, even companies that are exposed in terms of the debt market, I think those companies have not had any significant increase in terms of what they are paying as liability.
Yeah.
So I think H1 result will more likely reflect the H2 result. So you want to look out for those names that have high gross margins, very good in terms of cash flow, strong balance sheet. Look at those names, those strong names that have been beaten down, and invest in those names. Because what would happen is that just very briefly, I told someone to buy Aradel when it was under 1,200. He said, no, I think it is still going down. And then guess what? Now it's back to 1,500. Because the guy was I think you asked me that question. Now that it was you that asked me that question. Now that the oil prices have gone down.
Is it going down?
Is still going down? I said that not necessarily, because if you look at this, most of these companies, they do oil, gas. Has the price of gas gone down? No. The price of fuel, it's moderated, but gas has not moderated. So the point is that, and by the way, I saw their earnings quality. So what I would say is names that have been punished by the market, look at those strong names and allocate to them. That's what I would say as final. Stay invested. Don't put everything into the fixed income market, because the fixed income, the moment they see inflation moderates, you will see the bond market will begin to ease. And once it eases, people will, ahead of you, rush back into the equity markets, and so you find yourself buying back at the elevated prices, buying Zenith back at 130. Don't do that. This is, I believe the market has been punished. I believe equity names have been punished, and this is a good time for you to begin to.
All right, that's a nice time. Nothing's wrong with the stock markets. The business are doing very well. You're just having a little selling pressure. People are taking profits because they want to reallocate their resources. So you can still stay invested, as my guest has said. Now, that's what we are going to do for today. We've called the show an end for today. And please do not forget to like, subscribe, put on the notification bell on this channel because of the amazing content we bring. And also, we have a Telegram link on our profile. Just click on our profile. You see a Telegram link that can lead you to our community where we can interact on a close basis, and you also see information on a real-time basis. My name is Providence. Thank you for coming, and we're going to see you again. All right, and I'll see you again. Bye-bye.